Good evening, everybody. Okay. Yesterday was nice, warm weather. I even was thinking of putting some of the tops down and some of the convertibles and taking them out. Tonight, I'll have a fire in the fireplace. Okay. Again, the graphics of candlesticks makes it very easy. Or I say very easy, gives you good analysis of what's going on here. We've been in a consolidation stage. Really not telling us that the market's going down, just right now not going up. And that probably is, I don't know whether you could come right. I guess it broke through that level. So we're getting kind of a little of a potential J-hook. So once again, with the dojis up here and stochastics in the overbought area, we need to be a little bit more diligent as far as seeing which way they're going to go from the dojis. Now, as long as they stay above the T-line, makes it very simple. We're still in an uptrend. But we're not getting the confident moves yet. Charlie, Jim will help you get your charts up. So that was in the Dow. The NASDAQ, same scenario, just kind of a little bit choppy in here right now. Would anticipate with them being this close to the 200, they tried to get up there, but if they start failing, they're going to come back down in here and test the 50-day moving average. And interest rates, bond prices continue to hover in here right along the 50. Now, again, just like when it comes up and then pulls back and hovers along the 50, got to be careful. They're trading below the 50. This might be pulled back, hover up along the 50, and then head for the next move to the downside. Oh, that would TLT as the 20-year note. Same scenario. Kind of a little bit of support here, but not broken this downtrending channel just yet. But the other influences, like crude oil, as you can see, is just flat. Not too much strength in here. You can see there's a trend channel. But over the last 4 or 5 trading days, you've had indecisive trading, just kind of moving you on a flat basis. Let me make this a little bit bigger. And not only the direction is flat, but notice what the daily trading is. Just very indecisive. Lots of little dojis closing right about where it opens each day. That was crude oil. Gold, I would suspect they're still in this slow drifting downtrend, waiting for the 50 to kind of catch up. Let's see, we were short wheat with the anticipation that wheat was going to be pulling back to the bottom of the trend channel. But notice what happened down here. On Friday, we stopped out just barely. The last ticks of the day stopped us out right about where we got in, because essentially we saw a buy signal, a pullback, and then another potential buy signal that they weren't closing it down, another hammered doji, which told us, especially with stochastics starting to turn up a little bit, that we had a possibility that it could open lower and continue down, or a possibility it could open higher and go up. So it made it a bad trade. So this is kind of not a bad trade, but a bad risk situation to hold onto this because of this type of situation. So we had that same scenario over in the, we were short live cattle ever since this big evening star signal up here failing at the 200. Where was the first likely target? Down here at the 50-day moving average. Friday we saw that bullish harami, but stochastics weren't confirming yet that we were in an overbought or an oversold condition. So today we had set our stop right, traded above yesterday's or Friday's high. I told us they were taking it back up. We should stop out of that trade. Had a decent profit. And as you can see what happened today, they couldn't quite, let me make this big enough where you can see it. They were still one tick away from our stop before taking it down. So there's still a good indication that they're going to take this down. Now this is the May contract. To kind of get a more visual clarification, this is the April contract. This is the closer contract. It didn't quite hit this high, and they sold this off back down to where they closed below the 50. So that was a good indication that they weren't, the cattle market wasn't going to be acting very strong. Haven't even looked at hogs. Hogs not in a mode to be traded right now. Soybeans also not in a mode to be traded. If you're long, you would stay long as it stays above the T line, but definitely would not be buying it up here or shorting it. So we'll just leave this one alone. The dollar is what can add some strength back to the market. As you can see, when the market was in consolidation stage over the last 4 or 5 trading days, you can see what the dollar was doing. Dollar was picking up strength. Bullish harami came up. Now we have a left-right combo. And notice where this all occurred, right here in this top of this downtrending channel. So if you're trading any of the Forex combinations, just watch to see if the dollar starts fading off from here. More than likely, it's going to come back down to the bottom of this trend channel. Oh, somebody might need to help John with sound. And what else do we do? Oh, so instead of trying to guess which way a price move is going to be, maybe it was a different, nah, I've goofed up somehow. Anyways, this one, we would get ready to short, especially if it came back down through today's open, because that would tell us they came up here after a big bearish engulfing signal, stochastics heading down. If they traded this one lower, where would our next target be? More than likely the 50. And if we added to that, let me see if I can do this. I just took this as a trend channel right down through here. That would kind of coincide with over the next few days where this would be acting as a support level, and more than likely the 50-day moving average would be in the same area. So that one's on watch. We'll be putting a sell stop right here at today's open. If it comes down through there, then the probabilities are the sell signal is still in progress, and they're coming back to test the support level. Okay, I think that's about it on commodities and currencies. Oh, silver just doesn't pop up fast enough. All right. Okay, so gold, as we mentioned, That's not what we wanted. Gold is kind of drifting. And I was trying to get silver up here. Let's see what's in here. There's a silver. That's silver chart in a slow uptrend, which is making this stock right here still a good looking chart in the sense that CDE came back up above the T line. I'd still be a buyer of this one on positive trading because that pretty much tells us coming out of this fry pan bottom, our steady eddy is still in progress. And Watt is one that we still want to be buying. I think this is a bad tick here. This is the one that we're looking at. This signal right here, that belt hold that brought us back up. And just anytime you see a belt hold, and a belt hold is basically when they traded out of the trading range and come back into the trading range, that's going to be a strong continuation pattern. We saw that over here in Mankind earlier when it was in an uptrend, did that belt hold, took us up pretty strong because this essentially tells you they've wiped out a lot of the sellers. Another one, here's UAN. That's telling me they're coming up here to at least test the 200-day moving average. You can see the slow curve. You can see the doji sandwich type breakout. So we have these. Anytime you see these big gap ups, that tells you there's a dramatic change of investor sentiment. Look for your 45-degree. A big gap up move, look for your 45-degree. So that's exactly why, even though you've seen something today in ALDR, expect this 45-degree or better. I mean, it might have another big day and then a 45-degree. That happened in that one, and same scenario on AC, AD. Look what's happening here. Here's your big fry pan bottom. Where did the fry pan bottom start? Right about here. Where are you trading? Right about the same level. What were the two tickers before? Oh, CPXX. And these are just to kind of illustrate. And SeaWorld. The big moves, then look for the 45-degree. ACAD halted tomorrow. All right. All right. Here's Rice. Rice, there's your classic fry pan bottom J-hook pattern. Now, why is this a convincing J-hook pattern? Because it came back to the T-line and you did a bullish engulfing signal. Where's your next likely target? Here or even higher, because if this is wave one, wave three should be up here someplace. So that one's a good illustration that if you can find a price move that has a high degree of probability to it, and that's exactly what the classic does. It tells you, first of all, this is a good strong price move coming out of the fry pan bottom. Then we know what a J-hook pattern does. Has a good strong price move, then pulls back, then continues in that price move. ATSG, another big move, kind of a slow curve. There's your best friend again, breaking out into new territory. That one's good, and we saw the same scenario occurring over here in Dollar General. Little doji, gap up. You're right here at the breakout level. So this is wave one, wave two, and look at where wave two is supporting. Right smack dab off the T-line going into wave three. So if we can calculate that this went from basically 74 to 86, we should be going up another 12 points from here, which would put you in about the $96 area. So if you can measure that move, not only does it make for good timing on a breakout trade, whether you're buying the stock or buying the options, or because you know what your upside potential is, got very good grasp on calculating a spread situation. Uh-oh. I think I did this one all right. Well, for crying out loud, why won't that come up? Because you spelled it wrong, Goofy. Quote, there's a big move. There's your 45-degree, 100 end, closing below the T-line. There's your kind of your morning star signal. And look where you are right now, right at the breakout level. If this opens positive, you can be buying because your first target is going to be up here, which gives you a running start, or you could be in the next breakout move, like that move right there. IHS, another one, slow curve breakout, profit taking's over. I'd be buying the calls on this one on positive trading tomorrow. When you have a huge gap up like DG or CPXX, is that the hedge funds calling those? No, not necessarily. It's whatever the announcement was that created everybody jumping back in. So it doesn't necessarily have to be the hedge funds. I don't know what the volume was on those. And usually, yeah, it's everybody. You can't really distinguish who's the strong buyers. And unfortunately, or to say unfortunately, hedge funds don't have the flexibility of jumping into a situation immediately on that type of announcement. Because if you're a hedge fund and you like a stock that trades normally 1.7 million shares a day and you want to come in and buy 1 million shares, you're going to probably do it over a 3, 4, 5, 6 day period so that you're not running the stock up huge. It takes a while to accumulate that size of position. So usually they're not going to jump in on a gap up situation. So that's mostly not so much traders, but it is institutions, a mix. It's everybody getting back in. FN, another one that is setting up for that doji sandwich. That if this trades up above today's high, I'd be a buyer of this one, or even above today's open, and it was trading positive, I'd be a buyer, anticipating the doji sandwich creating another day like this is definitely breaking you out through this level. And JC Penney, those that are interested in for more kind of a longer term hold or even a trade, I wouldn't be afraid to be buying JC Penney here. Let me make this a little bit. You can see what the trading range was. Now you've got this big rounding bottom. Now you've got kind of a J-hook pattern setting up, which means if this is moved from about the 7 to the 5 or 12 range, 5 points from here takes you up into the $16, $17 area. And notice how it's starting. Kind of at the end of a flat trading range. Let's make this big enough. There's your morning star signal. So you definitely want to be buying this one on positive trading, and you're definitely looking for a breakout through this level. Oh. So if I was buying this one on positive trading tomorrow, I might buy a half a position here and another half a position up here. Bob, you're absolutely right. And you probably should have been out on a positive open. Remember, if you see a doji, just always remember the simple doji rule. They're going to move it in the direction how they open it after a doji. So if I see something like this happen and they start trading it positive, I know at least where my first target is going to be. Right back up here to the T line. So I'm closing out the position right in here, knowing that it's probably moving in this direction after the doji. What's my worst case scenario? It hits up here, hits the resistance level, and comes back down. You could always re-short it right about where you got out. You can always get back in. Mark, I usually will buy a full position. If there's a situation that tells me, hey, I better look, I know what the chart is kind of telling me, but I'm not convinced. Yeah, I might buy a half a position and then buy the other half a position knowing that I was heading in the right direction. But I would say 90% of the time when I go in and buy a position, I'm buying a full position. Because what I want to be able to do if I'm buying a half a position and I'm looking to see what happens up here, if it doesn't quite get there or something happens in here, I'm not as quick to pull the trigger on closing out the half a position because I'm thinking about buying the other half a position. If I buy the full position and it gets up here and fails, now I'm making a decision to close out the full position and move on. Aaron, you're the lucky one. You got the echo tonight. STRP. Nothing here yet, but this is where you kind of observe the obvious. And the obvious was they came up, broke through the resistance level, came and acted as support. Now they've pulled back to where you can see where the bottom was today, right smack dab on the 50/200 day moving average. This gives me the impetus to start watching for buying from here. If I saw a buy signal, I'd get ready to buy this, waiting for it to break out from this level, because essentially it's been a very healthy uptrend, as you can see. Moves up, pulls back, moves up, pulls back, moves up, pulls back. Now watch to see if it heads back up again. TZ, everybody hold on to your individual requests. I'll get to the, when I tell Jim to do the double line, that's when you type in your 2 requests. What did I just do? Okay, so PBR is one of the few oils that were acting well today. Kind of the same scenario. Came out of this big fry pan bottom, hit the first resistance level, pulled back, now came back and used that resistance level as support. If it opens positive, it's breaking out into basically wave 1, wave 2, wave 3. You can use that same analysis on rice. Fry pan bottom, pull back, get ready to buy this one on positive. No problem, TZ. And, here was the belt hold again. Look where they pulled back to after coming up through the support or through the resistance level. Right smack dab back to the 50 area, doing a belt hold. This one, you want to definitely be buying on positive trading tomorrow. I would probably put a buy stop at today's high, which was $30.95. I'd put a buy stop at 31 bucks. If it comes up through there, it's telling us exactly what they did. They pulled back, found support, and heading back up. So where's your next target? Probably up here at the 200-day moving average. VA, nice bottom breakout or slow curve breakout. These are the setups that we're looking for. Notice when it broke through this level, just ran like a scalded dog. Coming off of this, and notice what started the uptrend, a little morning star signal, broke through kind of on a double doji through the double doji sandwich through the 50. Definitely would be a buyer here. Because we are buying right here, what we're expecting. Expecting the breakout through here, and where's our next target? The 200. And do we always get big moves like this? I always ask this rhetorical question, and the answer is we don't always get big moves like this, but if you're trading off the patterns of what happens time after time, it puts you in a situation where at least the probabilities of being in the right direction in a big move are that much greater. Oh, this was again showing the fry pan bottom. There's your J-hook pattern setting up. Another one that I wouldn't be afraid to be buying on positive trading tomorrow. Because if this is wave one, which was from 24 to 38, that means that could take you up to the $50 area. And NK, right here at the potential breakout, just one that I'm watching to see if they can break through this level. If they do, there could be some good running room. There's a gap way back up here that it could be coming up to eventually fill. Okay, so if we know, or if we can assume the market is somewhere in a toppy, choppy range, and for all we know, they could slam it or they could blast it. We don't really know. The fortunate thing is we can be looking at charts on both sides of the fence here, and to kind of keep from being overweighted one way or the other, you can be buying puts or shorting this type of stock. That's GMS. Why is it time to short this? Notice what happened for 3 weeks here. Every single day was indecisive doji type day with stochastics up here heading down. Where's the next logical target? At least down here. And from this level, that's still a good 15, 20% to the downside. And where's the ultimate potential? Coming to just below the 50 down here to fill this gap. That's a good looking chart. Hertz, same scenario. First target is here, but that might not be a viable final support level because your stochastics have a lot of room to the downside. There's a little gap down here. So there's still a good 15, 20% it could pull back. But here's the nicest looking chart that we saw today on Fitbit. First off, look where Fitbit has come from. If I can find the top here somewhere. Guess it came from the $50 area. But notice where it's, notice what it did here the last few days. Right at the 50-day moving average, it did a bearish engulfing signal. Then it did a bearish doji sandwich over the last few days. Where do you think the next target is going to be? Right at the bottom of this trend channel. They could take this all the way down. So that's still a big, hefty move. First level of support would be here. That's $1.50 on a $13 stock. That's still about a 12, 15% move to the downside. This one I would definitely be shorting on weakness tomorrow. And weakness would be probably anything below today's low, which was 1336. Probably have a sell stop at 1335, that if it came down through there, it's still heading in the right direction. And with this possibly the first target, all the way down here until they can find buyers all the way down to shoot the $5 range. And G-Pro also in the bearish mode. You can see they came back down through the 50. Not a lot of strength in this, kind of that little head and shoulders type pattern. Another one I would definitely be shorting on weakness tomorrow. Oh, and we already did LinkedIn. Or did we do LinkedIn? LinkedIn, this was one that they were discussing quite a bit over in the options room today. but you can pretty much see the dumpling top. This one you can be shorting. At least we can figure if they're selling this one, they're coming back to test this level. Worse or better case scenario, that's a wave one, which was about 80 points. Shoot, they could take this down pretty hard. And Radius, another one, having a hard time getting up through the 50. There's your bearish engulfing, followed by a bearish doji sandwich, closing below the T-line and the 50. There's your first target down here, which would, again, be about 12-15% move to the downside. And then, if they can't hold that level, got this type of potential move yet, or at least coming down to the bottom of this trend channel. So that one's still a good viable short. This is the type of thing you want to always keep your eyes open for. And this is the exact reason why you want to know what each of the candlestick signals represent. When they broke out through this little range, where was your next target? The 200-day moving average. When it got up here, what did you have? Hanging man, doji, 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 gap down. Now you've got kind of a bearish trend kicker back below this level. They could be taking this one down. This is Noble Energy, down quite a bit more. IONS, the bigger the signal, the more compelling that reversal has occurred. Now, what's the significance of where this topped out? You can see, you could probably draw a line right, you can do that, practically right through the tops of these. Right at that level and started trading back off. Now, if they break this bottom of the trend channel, essentially tells us wave one, wave two, wave three is in progress. VRX was getting beat up, tried to come back up again. This is why whenever they bounce, you want to see what they do when they get up to the T-line. This one didn't even make it to the T-line. This one you can still be shorting on the basis, if this is wave one, wave two, wave three could be all the way down here somewhere. And remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And when something starts selling off, they keep selling it off until something out there turns it around. There's that dumpling top. This is Lenders Club. Good volume. Price is much lower, but it's got a good potential move back down into this area, which would be a good 45% downside. And what is this one? LCI. There's the trend. There's the failure again at the T-line with a gap down. You can keep shorting this one. That's Lynette. They're usually pretty good. So that's pretty much having to give you a supply of ideas both on the long side and the short side. Because right now, we just don't know whether the market's trying to keep its head up or whether it's ready to come down. So you want to have something in there that kind of gives you some hedging. Not so much hedging. Even if this moves sideways, you're going to make money on the longs and you're going to make money on the shorts. Okay, that's about all I got. Are there any general questions on candlesticks? Can you discuss again your strategy on position sizing, dollar amount versus percent of portfolio? John, all my position is equal dollar amount. So if I've got a portfolio that's $500,000, I might decide, all right, I'm going to have only 10 positions on, and each position is going to be $50,000. And there's a couple reasons for doing that. The first of one is the biggest, I want to say, bugaboo for most people's investing is their own emotions. So if you decide that your position size, which should be comfortable, have 10 positions on at $50,000, now what happens is each position is a unit of your portfolio. You don't have any of your emotions involved. As soon as you decide to put some of your emotions into a trade, and that if your normal comfort or your normal position is $50,000 and you see something that says, oh man, this position looks like the best one in the world. I'm going to buy 2 positions of this one. I'm going to put $100,000 into this trade. What happens after that is now you've got your emotions or your ego into the trade. And what will happen is, and I'm talking from direct experience, is more than likely when you start watching you're watching your portfolio the next day or whenever that position's on, you're probably going to spend 90% of your time watching that one position and 10% on the rest of the portfolio. And if that one position isn't doing what you expected it to do, in my case, it was always because the people that weren't as smart as I wasn't seeing the logic of why they should be in that position. And if it's not moving up just yet, I'm thinking, all right, I got to wait for everybody else to see the logic. And probably 3 or 4 days after I should have gotten out of it, I finally get out of it because it had my ego involved. If it had just been a unit of my portfolio, I could look at it rationally and say, all right, this unit's not working, close it out and move on to the next one. Now, the reason I keep it right at 10 positions is I can follow 10 positions at the end of the day doing my analysis of whether I want to stay in and out of it. I can follow or look at 10 charts probably within a matter of 2 minutes and see if there's something that needs to be done. If the market is roaring and I've got more money in my in my account, I say, oh, my market's going to be acting well. I'm going to start adding more positions. That kind of diminishes my discipline of saying, all right, if I see something great out there, let me go back and look at my 10 positions. Which one of these look like it might be running out of steam or not quite as good as the one I'm looking at? Well, even if one isn't finished going up, but it looks like it's gotten most of its move, it gives me more discipline to say, all right, I'm going to close this one out and move my money. Otherwise, if I just add positions, now I'm holding on to some positions that look good and some that are running out of steam instead of cultivating my portfolio to get rid of the ones that might not be as good to add better ones to it. So anyways, that was a long answer to say that's how I kind of keep my discipline in my portfolio. Explain briefly the meaning of waves 1, 2, and 3. How and why does gap appears created on charts on weekend intervals? Oh, a gap is created by, at the end of one day, they close it here, then on the next day they gap it up the next morning. So there's a gap in between any of the previous day's trading. And that's just based on the supply and demand. That if something big has happened, they gap it up after the they're buying here immediately and start trading it up, creating that gap. So the gaps occur by much more volume on the buy side than there are sellers until they reach a level where they can find some sellers. And then the 45 degree is that when you see a big price move, a 45 degree is just kind of a steady uptrend. And there's just a very simple rule of the 45 degree. You can stay long as it stays above the T line. With the Fed speaking this week, an option price is reasonable. What's your thoughts? on using a straddle on the index funds in case of overreaction to our announcement. Thomas, that's up to each individual of what trading strategy they want to use. So usually you got to remember, even when the Feds come out and make announcements, people have already made their decisions of what they think is going to happen. So that's already kind of built into the charts. So if you just keep remembering that the candlestick charts are the accumulative knowledge of everybody buying and selling during a specific time frame, there's people out there that are buying based on, I think something positive is going to be said. Other people are selling because they think something negative is going to be said. So usually a major decision, unless it's a big surprise one way or the other, but that's already built into the charts. How many days does he load on the daily chart? Lisa, I don't understand how many days does he load. It doesn't really matter. What we're looking at on any given chart, which one did I put a star next to on the long side? I know I did one. Oh, Shazam. Yeah, it doesn't really matter how big your charts are here. I usually have to make them pretty good because I'm hard of seeing. This is the important factor right here. What's the chart doing right now? Then you can start going back to say, all right, is there a support or resistance level back here? Was there a trend line? What's this whole chart telling me? But I'm just looking at this area right here to make my decisions. Would you give us a couple of examples of buy to cover stops on shorts? Would you give us a couple of examples of buy to cover stops on shorts? Oh, okay. All right. The reason we're would be shorting something like FIT is because we had a bearish engulfing signal. We had a left-right or a bearish doji sandwich. Stochastics heading down. Here's our target. So everything looks like it's heading down. So if I shorted it here, where would be the first spot that I probably wouldn't want to see it trade? I wouldn't want to see it close back up above the T line because that would tell me this downward has gone, but now we've got a different looking chart. So the T line becomes my my spot in this case to say I want to get back out of a short position. I might probably in this case, if it opened lower tomorrow, the T line is probably going to be down here. I might even use the halfway point of this candle, which would also coincide with the T line. Remember, the Japanese rice traders say if this is the signal that told you the bears are in control, then the bulls shouldn't be able to close it back up above that halfway point. If they can close it more than halfway, that means the bears or the bulls are in control. You want to be out of that short position. 45 degree, please explain, did I do that already? Yep. Big move, it's usually a 45 degree off of there. So what we're looking for tomorrow on ALDR is at least a 45 degree. And where's our next likely target? Eventually up here to the 200-day moving average. Say if I short FIT below 1336, where would I place my buy to cover or stop in case it doesn't trend down? Okay. Yeah, I'd use the T line. I wouldn't want to see it close back up above the T line. Because if it closed back up above the T line, what's that tell us about this move? It tells us there's some strength here, that maybe this trend channel is still in progress. Do you make most of your buying selling at the beginning of the end of the day, or do you decisions during the day. I would say, John, that 80% of my trades are done in the first 45 minutes of the day. Maybe, well, let's put it this way. 90% of my trades are done in the 45 minutes, first 45 minutes or the last 20 minutes of the day if something's not looking like it's confirming. 10% may be during the day, and those are usually moves that are so big that either I've got a big profit or it's moved past a spot. For example, if I shorted this on tomorrow and it came back up through the previous day's open, that's a lot of strength. That's too much strength for this to be short. I'd close out the position during the day. Does the wick count? The wick only gives you a degree of what the trading was during the day. The wick doesn't count as far as the signal. A bearish engulfing signal, it just is engulfing the body of the previous day. Now, on a doji, let me see if I can find something. No, that's not it. There something that, no, that wasn't it. Dojis. Dojis, I usually use the high or the low, depending on which way I'm going on a doji. That if I was short here, for example, it shouldn't come up above the previous day's high. That would tell me that there was too much strength to be short in it anymore. A couple today you said a particular stock needs attention, such as BG or LXU. Did that mean the stock looks like it's going the wrong way, or are you pointing out a target? No, when I say it needs attention, we recommended BG today. Now remember, some of you new members, each night in our members area, there's going to be the stock picks, and you'll see a lot of times it will just be. I try to do videos occasionally, but we saw the bullish engulfing signal, and last night we said if it was starting to trade positive the next day, you want to be buying immediately. So when it was trading positive today, that was kind of confirming. So that's why I say it needs attention, because that's one that likely can be bought. LXU, I don't know whether but I would put this, if I was going to say this needs attention, if this was opening positive and trading above today's open, yeah, I would say this needs attention because you could see what type of pattern it was setting up. So when it says it needs attention, that's a good time to go and look at that chart and say, all right, what's why is he saying that? So if, for example, on GameStop, if I saw it open here and start trading up above today's high, we've already talked that it needs, you can be buying this one on strength. If it came up there, I'd just be bringing it to everybody's attention to say, all right, start looking at this one. And so I do not try to tell people what to buy. I try to say this one is a good buy if it does this, so that everybody has the learning process continuing, so that at some point you'll recognize which patterns and signals are the best, and the factor there is that you recognize that the signals and patterns are the best, so that you don't have to have somebody, that's your part of your learning process. You don't have to have somebody demonstrating that to you all the time. The stochastics parameter used here is slow stochastics, 1233, yes. You move your stop with the slant of the T-line. If I'm in something, oh, that's a good steady eddy, yes, you move your there was some today that people pointed out that were in nice steady uptrends. I can't think of what they were. Monsanto, for example, or 3M. If I was long this one, which I wouldn't be because it's too slow and conservative, but if I was long this, I would keep saying, all right, let's move the stop now up to, I wouldn't want to see it come back down below today's low, which was 164.58. I might put it at 164.50 because it shouldn't come back down below the T line if it's in a steady eddy. So yes, I will move up. And if I see something moving pretty strong, let's say, for example, ALDR opens positive tomorrow and starts trading positive. So it's had a big, huge move. As it's trading up, I might put my stop right here where it opened. Because if it went up and came back down through there, that shows that's when the profit taking started. If it closed here and the next day it opened positive again and started trading up, then I'd move my stop up to that day's open. Prices coming off will be a 45-degree angle, is what he means. Prices. Oh, the prices coming off that big move will be a 45-degree, yes. Should be moving in like a slow slant to the upside. You trade future indexes, or do you announce them the moment you buy and sell? Yes, we trade futures over in the futures and options room. And so that's got a different vocabulary, different trading style. So we've got the two rooms. We've got the main room, which you're in right now. And then we've also got the futures room, options room, slash options room, where the conversation is more detailed on what option strategies to trade stocks with and what we're doing with the futures trades. After a pullback, what is your favorite candlestick combo for a buy signal? After a pullback, what is your favorite candlestick combo? Oh, it doesn't matter on the pullback. Let's see, which ones were we looking at? After a pullback, all we're looking for is a candlestick buy signal. Once we see the candlestick buy signal, we can interpret or evaluate what the next price move will be based upon what type of pattern. There's a wave 1, wave 2, going into wave 3. Somebody was asking earlier, I think, if I went over that too fast, explain wave 1, wave 2, wave 3. Oh, okay. Yeah, we're not trying to trade waves like an Elliott wave, wave 1, 2, 3, 4, 5 with an ABC retracement. We're looking at what human nature usually does, and it moves in waves. So if this is wave 1, this is wave 2, starting wave 3, we know wave 1 and wave 3 will be about approximately the same. When it gets up, if it got up another 6, 7 points, completing wave 3, then we see if there's going to be a pullback, which now becomes wave 1 here, the pullback wave 2, and then see if wave 3 is the next move up. Okay, ADLR is up further. How do you explain or trade a gap up with a red candle? Do nothing. ACAD, yes, this is what we call the message. The message is they've gapped it up and then did some profit taking, but the message was they gapped it up. Now we just wait to see when the profit taking is over. It might be a doji, it might be a hammer, or it might be a bullish harami or a bullish engulfing. If we start seeing them, and again, the advantage we have with candlesticks is we can see exactly when the buying occurs based upon what color candles being formed over here. So this is the message. Gap up. Then there was profit taking. But we want to see when the profit taking is over, which will continue that message. There's very strong buying. If you need information on how to get into the options room, Pete, if you'll email Abraham at candlestickforum.com, he'll give you the instructions. It's another fee because we've got other expenses for running those rooms. So that's why we don't kind of push it down everybody's throat. It's got to be something more that somebody wants to be involved with. So I guess that's about all I can say about that. What time is opening time for the options futures? Usually the same time. As you see, Stephanie, when I come in to the rooms in the morning, I usually type in things that we're watching. And then usually I'll come in for about 15 minutes into the options and futures room right before I come into the main room. But I keep an eye on both rooms. If I see something, if I'm doing something, or if I see something that needs to be mentioned, let's say, for example, right now we're still short the June live cattle, but we've had a doji, stochastics aren't quite in the oversold area. But what do we want to see to stay short? We want to see that they open up flat or keep continuing to trade it down. We don't want to see them open up positive and start trading positive. If they do that, that's a good indication that they're supporting here on the 50. So I might come in and verbally say into the futures room, you might want to start covering your live cattle positions. Then I send that out to everybody in an email that's in the futures trading area. How do you trade earnings? Do you trade volatility? Remember, Steve, if you go back to the basic concept that candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame, then you'll be the chart will usually tell you what's happening. Now, are there surprises on a chart at earnings time? Yes, sometimes you get it, but for every time I get surprised on an earnings report in a negative area or a negative way, I'm usually got the positive surprise 4 to 5 times more often. But the people that know what's going on are usually buying or selling right before earnings. Is Apple starting wave a new wave one? Not yet. You can see there's a fry pan bottom. I would say this is wave one, wave two, wave three. Yeah, if it started back up, then I'd say this is wave one, wave two, going into wave three. And I could calculate if this was wave one on this move, then wave three is going to take us up to the 200-day moving average. Do you use the T-line for stops on your options and get out immediately? You use the T-line. Remember, buying an option is just another method for controlling that stock. So if I'm buying puts on Apple because it opens lower tomorrow, that's because I'm shorting, instead of shorting the stock, I'm buying the puts. If Apple turned around and came up and closed above the T-line, that tells me that I shouldn't be in short anymore, which is covering your put positions. Is that a bearish engulfing? You could consider it that, yes, and that's why I'd kind of be a little bit leery. So in a case like this, if I was long Apple, we only have one criteria for staying long. It has to open positive and trade positive tomorrow to stay in it. If it opens lower, this now becomes that little left-right combo. Where do we think it's coming back to? It's coming back to at least fill this gap and maybe possibly coming all the way back down to the 50. Okay, any more questions? If not, Jim, go ahead and do the double line. And in 4.8 seconds, do the next double line. Oops. SNI. That's a good looking chart. There's your belt hold. You can see we have a wave 1, wave 2, J-hook pattern in progress. And we had a piercing signal, a gap up doji. Makes this very simple. If it opens positive after a doji, which way is it going to move? More than likely it's going to move positive. And if this moves positive, what type of candle is it going to create? Usually a doji sandwich, which means this candle and this candle will be the same. And it's telling us our J-hook pattern is in progress. So the more pieces of evidence we can put into our analysis that we've got a good chart set up, the better off we are. So I wouldn't be afraid to be buying this one on positive trading tomorrow. Now, that positive trading is probably going to also be a function of what the pre-market futures look like on the open tomorrow. If the Dow looks like it's going to open up 60 points, yeah, I'd be a buyer. If the Dow looked like it was opening up down 70 points, I'd wait a little bit and see what they do once it opens. Vivo, a left-right combo, kind of the same scenario, but not quite as compelling. Yeah, I would be a buyer on positive trading if it opened positive tomorrow, and just wouldn't want to see it close back below the T line. Tiva, nothing there. If you're short, you stay short. And SHPG. This one, the opposite. If you're long, you stay long as long as it stays above the T line. You pretty much want to see it open positive tomorrow. Still creating that J hook because notice what you're coming out of, kind of a scoop pattern. And VTAE, right now you don't want to be in this one. If anything, you want to be short in this one on weakness. And VIP, if you got out of the other day, you can be buying this one on positive trading. But at this point, I'd be more apt to buy it coming up through the 200, giving you a bobble breakout J-hook pattern setup. And CUDA, Morningstar signal, back up above the T line. You can buy this one on positive trading and keep it as long as it stays above the T line. PayPal, I'd be short. This one had the opportunity to come back up and get back up above the T line with it opening lower. Told you the bears were still in control. You can even be shorting this one on weakness with the expectation they're going to bring it back down and test this level, which would also kind of coincide with testing the 50-day moving average. And MXL, that one did the opposite. Instead of opening lower and trading lower, it opened in positive. You get ready to buy this one on positive trading because that tells you that the uptrend remains in progress after this big hammer type signal. Flamel, this one has to open positive tomorrow. If it opens lower, expect it to come back and test the 50. And TMST. This one I probably wouldn't be long or short. You can see the trajectory, which there is none. I'd be someplace else. And PTLA stays short. With that gap down, want to stay short on that one. Let's see. We'll put that over in the short column, PTLA. Let's see. First Trust. Another one I wouldn't be long or short. No direction whatsoever. How'd I skip this one? UNG. Again, there's kind of your little morning star type signal. Left-right combo. You can buy this one on positive trading. You just watch to see what it does once it gets back up here to the 50. And CRL. This one I wouldn't do anything with until they broke this level right here. You can see it's having a hard time. You had a big morning star type signal. If you like it, you can stay long, but it probably is not going to get a whole lot of energy until it breaks out through this level. SRPT. Oh, it's a hold or sell. I'd probably sell both of them and move to something that has more activity in it. SRPT has to open positive and trade positive tomorrow to stay in it. And FIVN, ever since the left-right combo breakout, you stay long. Now, you're getting up in the overbought area. This is where I start putting my stops at the previous day's open because it shouldn't have enough strength to come back down through that level. If it does, it tells you the bears are starting to take control. Oh, an inverted head and shoulders, yeah, I wouldn't be going back that far. I'd just be more looking at this wave 1, wave 2, on into wave 3. SYAN, I would stay short. You can see the dumpling top, then you can see the bearish doji sandwich, another bearish doji sandwich. I'd still short this one on weakness tomorrow. Remember, coming out of these dumpling tops, that's where the force starts pushing it down pretty strong, just like coming out of a fry pan bottom. The force takes you up 65. Yeah, that'd be a good target area on this one. BRTX, nothing here. I probably wouldn't be long or short, but if I was anything, I'd be short with the possibility that it's going to come back down into the trend trajectory. And GWPH, notice how it's had a hard time getting through the 200. So it's in the bobble. So it has to stay above the T line. If I owned it, it has to open positive and trade positive. If I was looking to buy it, I'd look for it to break out above the 200 on the bobble breakout. So if you're going to go short, yeah, it's got to be on weakness tomorrow. Freeport it's going to move in the direction how they open it. Notice the doji right on the 200/50 or the T line. If it opens lower, it's pretty much telling you they're having a hard time getting through that level. I'd be out of that position. You should have been out of this position on the close below this level. If you're looking to buy it, I'd use today's high. If it comes up through there, you've got your doji sandwich starting back up, taking you back up above the T line. And VNTV, kind of just stay long on this one as long as it stays above the T line. It looks like it's trying to set up a little cup and handle. Skyworks, you stay long on this one as long as it stays above the T line. DICOM has to open positive and trade positive. If it opens lower, it's coming back to test what had been a resistance level, testing the 50 to see if it's going to act as support. And EXPE, hit the 50. Stochastic's not quite finished to the downside. If you're short, you stay short, but now you have to be a little bit more diligent to see what it here at the 50. And the ProShares S&P, has to open positive also. So you can see how they came up through the resistance level, did kind of a little meeting line. The meeting line is they opened here and closed here, opened down here and closed right about the same level it opened. Now it has to open positive to tell you your uptrend remains in progress. Nugget not doing too much of anything. I wouldn't be long or short Nugget right now. No direction to it. And Buffalo Wings, why was that not, is it, did you? Buffalo Wings, this one. This one still has to get a close above the T line to get into it. If you were short, you should have been out of it today on a positive open. FAS, it's going to move in the direction of how they open this one tomorrow. And LGF, you knew with stochastics getting near the oversold area, if they opened it positive, where they were going to take it. They're going to take it up here to the T line. Did kind of a spinning top doji. Makes it simple. If you were short, you should have covered it today. If you didn't, you covered on a positive open tomorrow. To stay short, it has to open lower and start trading lower immediately tomorrow. AD or AXDX, we had our buy stop at 14. It got up to 1397 today. You still put your buy stop at 14. If it comes up through there, the kicker signal is still in progress and the breakout of the 50 is still in progress. AMKR also has to open positive to stay in it. If it opens lower, they're coming back down at least to test the 50. When you buy options, do you use your same position size rules, amount of portfolio, or do you go to smaller dollar amount? I'm in a smaller dollar amount. If I have 10 positions, let's say I've got a $100,000 portfolio and I've got $10,000 positions, I might take one of those positions, $10,000, and that becomes my option trading position, and I might have three $3,000 option trades going on in that one area. So now I'm following 12 stocks or 12 positions instead of 10. But each one of those positions are $3,000. DLMG, you shouldn't be in this one. It should have closed it out a few days ago when it closed here. I wouldn't do anything with this one until you see some direction. Right now, obviously, it's moving sideways. Sonic, this one you can be buying or staying long as long as it stays above the T line. Even right here, I might not have closed it out. Yeah, I might have closed it out. But this is a case where if I closed it out here, I would have been buying it back here based upon the bullish engulfing signal and positive open. HB Fuller. All you can do in this one is stay long as this steady eddy stays in progress. Facebook, you can stay long on this one. It's just not a very exciting mover percentage-wise, but if you like it, you stay long. We did PayPal, RMW. One that I wouldn't be long or short. There's no direction to it, and there's not enough movement to even trade it, even to the top of the channel. You're only going to get a 7% return. There's too many other places where you can get 10% or greater. My minimum usually is I want to be able to make 10% on a trade. Doesn't mean I'm going to make 10%, but I have the potential of making that 10%. So there's going to be a lot of good-looking charts, but if your upside potential is only 6% in one and 20% in another, obviously you want to go with a 20%. So I use 10% kind of as my criteria of what my upside potential is going to be. SHPG has to open positive and trade positive, and VNTV, same scenario. You want to see this open positive kind of doing this little cup and handle. Netflix had a good day. I would suspect at least they're trying to get it back up to the 200-day moving average. And MKTO, you stay long on this one as long as it stays above the T line. And CLR, this one, oh boy, you shouldn't be in it. I would rather buy it at $30 or $31, knowing that it completed the bobble breakout back up through the 200. FT, you just stay long. That's a nice steady eddy. And MWW, Monster Worldwide, I wouldn't be long or short this one. No direction to it. Harley, another one you shouldn't be in long or short right now. I just watched to see at this point I wouldn't be long or short, and I wouldn't be long until they can get it back up above the T line going for the 200, and I wouldn't be short unless they open it lower and started taking it down tomorrow. TripAdvisor, right now, if you're short, you can stay short, but it has to open lower tomorrow to stay in it. And TGNA, this one, if you're short, you stay short. You can see the dumpling top. If I was going to short it, though, I'd probably put my sell stop below 23, telling me that this little level, support level, is broken. And TRGP, same scenario. If I was going to short this one, it'd probably be back down in this area, completing the dumpling top. FIT, we did. FIT is probably going to be on the recommended list of short because of your bearish engulfing signal, bearish doji sandwich. I would suspect it's coming down into this area. All right, Bonnie. GSI. Now, this is kind of your message. The message was they gapped it up, sold it off. But today, they told you the selling had stopped. You can be buying this one on positive trading tomorrow. So if I was buying this on positive trading, where would I not want to see it trade? Back below today's open, because that would tell me the sellers are still in control. Verifone, you should be out of this one, but I'd rather buy it back up here above the 200, telling you that your bobble breakout has occurred. Staples, just stay long on this one. Big bearish engulfing. I would suspect your next target is the 200. I guess it would be the inverse of a 45-degree angle. Oh, when stocks gap down, do they? Yes, they also go down in a 45-degree angle. I'm trying to think of which one. Yeah, I would say this. Now you're in a 45-degree to the downside. UGAZ. UGAZ, you can be buying. If I was buying tomorrow on positive trading, breaking this little downward trend channel, my expectation would be coming up here to the 50. But if it opened positive, it shouldn't close back below the T line. Usually a fry pan bottom, you can see there's a slow rounding bottom, whereas others, when you see there's no trajectory, it's just kind of moving straight sideways. MDLZ just stays short. Now, we've had a doji. You're in the oversold area. So if I was short, I'd probably use today's high as my stop. It shouldn't come up through that way. Do you confirm you're buying stock signal with indices moving up or down, up or does not matter? I want to see that extra confirmation, Sam. I want to see that if I'm buying a stock that the market isn't falling out of bed, because obviously if the market's falling out of bed and a stock opens positive, it's going to have a much tougher uphill climb than if the market was opening flat or starting to open or opening up slightly positive. That tells me the trend that I expect in the market is still moving in the direction, and the stock that I'm buying isn't going to be affected by a big down move. So obviously, if we think the market's heading up, you want to be going with a flow with finding the strong buy setups. Market's going down. Obviously, you're going to have more sell setups that you're looking for. And if the market is moving sideways, you want to have a few longs and a few shorts because the market's not going to influence the direction of either direction that much. Price line, you stay short ever since your little hanging man gap down. I would suspect the 200. Good night, Diane. And Cyber, you can stay long. Just make sure it doesn't close back below the T-line. You had your buy on ADX at 1360. Oh, I did at 1360. Which one did I have at 14? Ah, KBH. All right. So even if you bought this one today, you can stay long as it now stays above the T-line. Thank you, Bob. It was KBH that I had it at 14, and the high was 13.99. But we'd still be buying this one on positive trading if it came back up through this level, because we've had that gap up doji, and we're kind of breaking out through the 200. NEWT, good looking J-hook pattern. You can buy this one on positive trading. Let's see, I think we did INO. Just stay long on this one. LGF, if you were short, you probably wanted to cover it today on a positive open because you knew what your target was going to be. They're probably going to come up and test the T-line. If you didn't cover your short, you better open and start trading down tomorrow. If it opens positive and starts trading up, close out the position. If you covered your short position today, put your sell stop right now at today's open. If it comes down through there, that means they failed at the T-line and they're still heading down. Citigroup, I wouldn't be long or short. Right now, there's nothing here to tell me there's any direction to this one. Can you explain a little bit more about the left-right combo? You mentioned it on a left-right combo is a doji followed by a bullish engulfing signal. Doji's kind of that little indecisive day. The bullish engulfing tells you the decision they've made. So anytime you see a doji followed by a bullish engulfing or a doji followed by a bearish engulfing, it tells you that's a strong decision of going in that direction. So I would suspect they're going to come up here at least to the 50. Okay, Vladimir. The markets right now kind of indecisive up here. We're still above the T-line, so you anticipate we're still in an uptrend. But we've seen a bunch of dojis up in this area, which is kind of giving us an idea that the trajectory is kind of flattening out. So we're at the point where We don't know whether the market's heading up or heading down. So that's why you want to be prepared that any long positions that are starting to show some weakness, you get ready to take profits and or have some short positions in the portfolio. Any difference between just wave, 3 waves you use, and 5 waves, Elliott? No. Well, no, we're not trading Elliott Wave. All Elliott Wave told us was that prices move in waves. We want to see what our signals and patterns are telling us. There's our pattern, fry pan bottom, wave 1, pull back. Now we're starting wave 3. So wave 1 and wave 3 is all I'm interested in. I don't care what's going to happen after that until we analyze the charts at that point. Does the doji sandwich have to be 2 green candles on either side of the doji? Yes, or 2 red candles on either side of the doji heading down. Now, if you have a red candle, then they gap it up and do a doji above the previous day's open, and then they open up positive and continue going up, that now becomes a red candle, doji, green candle. That's now a flutter kicker signal, which if you took that little doji out of it, you'd have basically a kicker signal, which is your strongest reversal signal. SPUX, is that the short? Yeah, it's just kind of hovering in here, so we're still waiting to see which way they want to take it. Yeah, it's indecisive. Okay, with that, let's call it a night. We'll see everybody bright and early tomorrow morning. All right, we'll see you then.